Good morning. Welcome to the XM.com weekly market update. And we're joined again by Peter McGuire, the CEO of XM. Good morning, Pete.
Good morning, Andrew.
All right, plenty of data last week,
Yes.
all around the globe. So we'll start on the domestic side of things. So the employment numbers came out in Australia. Over 60,000 new jobs in full-time employment. Unemployment rate at 3.6%. And as we've said on many occasions, not only domestically but offshore as well, these labour markets are very resilient.
They are. The old story, we've said it for a year and a half, 2 years. If you want a job, you'll get a job, and that proves it.
Yeah, it's and that's a 2-year chart there, and
Sure.
There's 6 occasions where it's a negative number, but it's
the positive outshines it.
Yeah, very much so. Which leads into the Aussie dollar. So, and we spoke a few weeks ago saying how it was languishing or range trading a bit, but it's come out of its slumber the last couple of weeks. So partly on the back of the Reserve Bank putting up interest rates.
Exactly.
And I think partly on the back of the US not putting up interest rates.
Absolutely, last week. And of course, stimulus talks coming out of China. And that's, I think, probably got a little bit further. It's a proxy, of course, Aussie versus US in regards to how China plays. So, yeah, it's had a nice rally, all right. It's been dynamic.
Yeah, well, that's like 3 cents, which is a decent
it's a big number.
Yeah, it certainly is. So let's head up to Japan. They have higher inflation, which compared to a lot of other economies, they're probably happy with.
They are. They had decades of very, very low inflation. And we're all conscious as far as what the Nikkei's done in the last probably 6 to 12 months. It's been 33,000 odd points.
Yeah.
So it's just been dramatic. And you've got a yen sitting nearly at 142. So no movement there from Governor Ueda. And where it plays from here, I think, is going to be, if we see some form of central bank or Bank of Japan policy statement in the next over this summer period in the Northern Hemisphere, then that's going to be the first point. And the second one is, are we going to see any intervention with a weakening yen?
Yeah, well, that's right. And we look at the yen there, as you say, around that 142 mark. So it's for a few months now, it's pretty much been one-way traffic.
You bet. Great market to trade.
Yeah, and you look at that, like going back 3 or 4 months, it's sub 130.
Yeah.
So,
it's been unbelievable.
Yeah, for sure.
If you only traded one market, that was the market to trade.
Yeah. Head over to the US, a big drop in the CPI number, so down to 4%. So
incredible.
Which obviously the markets loved. I think a lot of it was probably priced in, and once again that kept the Fed on hold.
Yeah, well, they certainly in June. I'm not sure how they run in July. They say it's about an 80% probability that Fed Chair Powell, they'll see 25 basis points, and you may see another 1 or 2 after that this calendar year, or the rest of them in play in the end of this last 6 months. So let's just see how it rolls, man. But you can't dispute the number. The number's very, very good.
Yeah. And I think, like, even if there was another 1 or 2 interest rate rises, the market will just take it in its stride.
Yeah, eat it up.
Yeah, for sure. Because then they'll know
that it's game over.
Yeah, very much so.
You don't want to be running rates this time next year still going up.
No. And you're sort of, as they say in the equity markets, they're always looking about 6 to 9 months ahead.
Of course.
So, which they probably are in that mode already.
Oh, yes.
I suspect.
What'll
be interesting, I think, as we've spoken about quite a few times, obviously the big tech stocks have been so hot this year. It'll be interesting looking at those small to mid caps, like maybe the Russell 2000 and whatnot. Yeah. That's now starting to creep up a bit, and that's been sort of way behind some of these tech stocks. So
100%.
That'll probably be the real test.
Where they're looking at the end of the third quarter.
So is it a new bull market? Technically, yes.
Oh, yeah.
But
for
got to
some
look
sectors of the market, no.
No, you've got to look at the market in its entirety. Yeah, so, but yeah, it's good numbers there. And once again, we look at the inflation rates there. There's still some high numbers there in the Eurozone and the UK, but all trending down. They obviously, both the Eurozone, well, they put up rates last week, and the UK looking to this week. You would suspect that they still have to rise rates, probably at least another 0.5%, probably maybe more. Yeah, you've got Swiss National Bank coming out this week. We're saying probably 50 basis points because they only have full rate rise, 4 meetings a year. And you've got Bank of England this week. Last week you had the ECB up 25, as you mentioned. So there we run, man. It's going to be an interesting week how it plays. Yeah. But I think still when you've got inflation anything above probably 5%, you've still got a fair bit of work to do
to get it down.
Because in reality, you've still got negative interest rates, or real interest rates.
That's right. So, and you've got, where you look at the Eurozone there, or, it's still, I know I'm looking at Japan, sorry. Japan's still, in some form, it's still climbing. It's had a bit of a pullback, but so let's just see how it all rolls, man. But second half of the year is going to be fun.
Yeah, I think the interesting one there is that yellow chart there, China, which is extremely low.
Incredible.
And there's, a lot of talk coming out of China at the moment of
big stimulus.
Yeah, and things are just floundering a little bit, and they're going to need something.
They'll need a lot. You've got, you've got a big population that's having trouble getting jobs.
Yeah, and which
is not a good sign when you've got 1.4 billion people.
That causes the unrest, yes.
Yep.
Once again on China.
They're loading up all right.
Topping up their gold.
And Russia has been an incredible buyer. It's just been absolutely dramatic over that 13-year window.
Yeah. Well, it's pretty much been consistent, hasn't it, from a Russian perspective? So
it's game on. Yeah. India has been very strong as well, but nothing like Russia.
Yeah.
But they're all together. I mean, when you're looking at that, they're the BRIC nations that are looking at moving away from the petrodollar. So how, and they want to be gold backed. No doubt, buying reserves like that gives them the ammunition.
Yeah, it certainly does. And finally, just the actual gold price, still around that sort of 1960 sort of mark. So it's been sort of range bound for the last few weeks.
It has been, yes.
But you wouldn't say it's come off significantly. But then again, it was close to an all-time high. So
yeah, exactly. It's given back a little bit of that, evaporated and took out the hot steam. And I still think that its best days for the rest of the year are ahead of it. Goldman's is saying 2,200. A number of the big banks have got forecasts around that sort of 2,200, 2,300. So let's see how it rolls. But when you go back a year, and you're only going to go back to October last year when it was at 1,650, and then just before Christmas, in that November period, it's been one-way traffic.
Yeah.
So yes, no wonder people love to trade gold.
Yeah, and I think when it runs hard like that, the steam's got to come out of it eventually, or the market takes a bit of a breather.
Oh yes. Looks at other markets.
Yeah, and then all of a sudden, if it comes off a little bit further, all of a sudden they're looking at, hang on, this is another good buying level.
Yeah, and you've had a lot of movement in that period of time, 8 months. You've had a dramatic amount of move as far as central banks and interest rate policies. Yeah. And it's, for gold to still be there at 1963 tells you something.
Yeah, for sure. So, yeah, but interesting markets. As you say, we've got a few interest rates announcements this week, which we'll keep an eye on.
Sure.
And see how these markets play out.
I can't wait for next week.
Good stuff. All right, Pete. Thanks again.
Thank you, Andrew. Bye.
And that's the XM.com weekly market update.